This episode provides a checklist of considerations when organizing a new charity to provide relief in the aftermath of disaster: earthquake, hurricane, wildfire, pandemic, terrorist attack, war. Many disasters require long-term recovery efforts, long-term fundraising, and a long-term commitment to the victims. The focus of this episode is on the many steps the new organization needs to tackle on its way to providing effective disaster relief. Welcome to the EO Radio Show, your nonprofit legal resource. Brought to you by the Exempt Organizations Group at Farella, Braun & Martel. My name is Cynthia Rowland, and I'm a partner at Farella. I'm a business and tax lawyer with more than 30 years of experience advising clients on nonprofit and charity law. Through this podcast, our lawyers and guests will discuss a range of legal and business issues impacting the nonprofit world because we understand you work hard every day to make your community a better place to live and do business. Many of our programs focus on the basics, and at times we'll do a deep dive into narrow and complicated legal issues. Again, welcome to the EO Radio Show. We're glad you're here. Over the 3+ decades of my career helping charities help others, I've watched many good charities organize or refocus and expand to meet the needs of the occasion, providing amazing support following disasters. From the first local events of my legal career with nonprofits, those were the 1989 Loma Prieta earthquake in the San Francisco Bay Area, followed a few years later by the Oakland firestorm, and then many years later the 9/11 terrorist attacks, Hurricane Katrina in New Orleans, and many others, up to the most recent. Notably, for me, Hurricane Dorian in the Bahamas in 2019, and then, of course, the ongoing COVID pandemic and its reverberations around the globe. So, before launching into the main points of this episode that address how to form a new disaster relief charity, I do think it's important to pause first and consider the fact that there are many existing disaster relief organizations operating throughout the world. And most community foundations also have existing programs to help both locally and also throughout the United States, and in some cases throughout the world, by providing financial resources to those in the best position to help a community recover from a disaster. Also, many charities that are formed for one purpose, say community development in a particular region, can expand their purpose to include disaster relief. So it may be quite appropriate to simply add a disaster relief program to an existing charity to respond quickly without the need to create a new organization altogether. This avoids all the expense and time involved in creating a new charity. The existing one, of course, may need to account for disaster relief donations separately, and it may need to report the new program on its tax return for the year. But by comparison to creating a new entity, working with an existing one can be the most effective under the circumstances. But when the relief effort will take years and a long-term commitment, a new charity for this specific purpose is often a good choice. The IRS has an excellent publication on its website that covers disaster relief. See the show notes for a link. It's labeled as IRS Publication 3833. That's IRS Publication 3833. In that document, the IRS provides great resources along with its menu of web pages that address formation issues in general for creating a new charity that is exempt from federal income tax. A key question that comes up is how to get the exemption approved quickly. Sometimes IRS regular processing times can take as long as a year, even for non-controversial charitable purposes. I'll circle back to the expedited procedures after running through the rest of the list of issues the founders need to consider. Founders who have already been involved in charitable organizations will recognize many of the items on this list, and founders who have not run this gauntlet before may find it intimidating, but it is manageable. So here is the checklist of issues the founders of a new disaster relief charity will need to address. First, consider the formation issues for the new charity. The entity most likely will need to be incorporated as a nonprofit corporation, but there are other alternatives, so you may want to refer back to episode 1 of this podcast, where I cover the basic entity types. The state law where the organization is formed may also have specific governance requirements for the new charitable entity. Next, consider state law registration and reporting requirements. Many, but not all states, require a charity that receives contributions for charitable purposes to register with the registry or the registering authorities relatively soon after it receives charitable funds, and annual reporting requirements will need to be considered and planned for. Next, the organizers also need to be aware of state and local charitable solicitation rules. While a thorough discussion of the registration and reporting requirements is beyond the scope of this episode, the important note here is that if the plan is to fundraise from the public, founders need to pay close attention to the requirements for fundraising, since the lead time is long and the requirements for registration are complicated in most states. Most organizations don't want to be caught up in an investigation by the charity regulators for fundraising in violation of the registration requirements. This is an especially important issue whenever the new charity plans to fundraise with a Donate Now function on their website or through a fundraising platform or by direct mail. There's many new forms of solicitation that are coming up now, and all of those implicate the solicitation registration requirements. Another really important process to plan for when forming a new charity is proper bookkeeping and accounting, especially if the amount of fundraising will reach the threshold for an annual independent audit from a certified professional accountant, that's a CPA. Some state charitable fundraising rules require a charity to obtain a CPA audit for fundraising when annual contributions reach as little as $500,000. So once the charity is incorporated, its board of directors and officers are identified, and basic governance and state law registration requirements have been addressed. Typically, the most urgent next step is applying for tax exemption and qualification as a public charity described in Internal Revenue Code Section 501c3. Every new charity with anticipated annual gross receipts in excess of $5,000 must apply for this exemption from U.S. income tax. The IRS has some really great resources online and in reader-friendly publications that explain the tax exemption process. See the show notes for links to these publications and application forms. The form is known as IRS Form 1023, or the short form 1023-EZ for organizations that plan to be very small. Most disaster relief organizations wouldn't file for a 1023-EZ because they would, by definition, be looking for contributions far in excess of the nominal threshold for which the 1023-EZ would be appropriate. So one of the most common concerns for the new disaster relief charity is how to get that IRS approval quickly. Normally, the application forms for tax-exempt organizations are processed by the IRS in order based on the date received. IRS processing times vary depending on a lot of different factors, and sometimes we see wait times that approach a year. There is a mechanism for requesting expedited approval, and here are some tips for that. Keep in mind that an organization should only request expedited handling of its application if there is a compelling reason to do so. The IRS review won't be expedited simply because the organization plans to help disaster victims. A disaster relief organization seeking expedited review must show that it is meeting an immediate need of disaster relief or emergency hardship victims, and that its ability to provide immediate assistance will be adversely impacted in a material way if the application is not reviewed quickly. Not all requests for expedited treatment are granted expedited review, and just because expedited review is requested, that doesn't necessarily lead to a quick, favorable determination from the IRS. As discussed in episode 9 of this podcast, the disaster relief charity still needs to establish that it will be serving a charitable class and not a specific person or group of persons. And all of the other many requirements for exempt status have to be met. Keep in mind that the IRS Form 1023 is a pretty complicated application that covers a lot of important details regarding the manner in which the new charity is organized and operated. It's not just about the disaster relief program itself. In a nutshell, thinking about the request for expedited review, if the new charity wants to request expedited treatment, here are the requirements. First, the request for expedited processing needs to be made at the time the application is filed, and there really isn't a process for requesting expedited treatment after the application has already been filed. So walk through these requirements before submitting the Form 1023. The request for expedited review that is sent with the exemption application, that is, the Form 1023, must include the following 8 items. First, a compelling reason to process the application ahead of others. Number 2, a brief description of the disaster and details of how the organization will provide relief. Number 3, an explanation of the immediate need for the specific disaster relief services the organization provides. Number 4, a description of any pending grants, including information about the grantor or grantors and the gift amount or gifted property that has been promised. Number 5, an explanation of how the loss of the promised grant or grants might impact the organization's ability to operate and provide relief. Number 6, a description of any significant business emergency demonstrating that the business emergency will significantly impact the applicant's ability to operate, and explaining how expediting the application will enable the applicant to avoid the emergency. This comes up, for example, if there's an impending deadline imposed by a court or a government agency that will affect the disaster response. Number 7, a statement explaining any other anticipated consequences if the expedited review is denied. And number 8, the date the determination letter is needed if there is a specific deadline. A good recent example of a request for expedited review that was granted involved a charity organized to help with evacuations from Ukraine following the recent invasion. A new charity demonstrated that it could not commence fundraising until the favorable IRS determination letter was granted, and that it had volunteers on the ground with the ability to rapidly mobilize drivers and vehicles to evacuate victims once it had the funding to do so. Keep in mind, though, that expedited review has a pretty high bar, and many worthy programs, like student scholarships, programs to address climate change, and the like, these are urgent needs, but they're unlikely to be granted expedited review. Circling back to some other important considerations for the IRS exemption application, that is, the Form 1023 for the Disaster Relief Organization, it's important to remember that the entity will still need to meet the public support tests. Often, operation as a private foundation is apt to be problematic for a disaster relief organization. Episode 5 of EO Radio Show goes into some detail on the complex rules for public charity status. It is almost always important, for practical reasons, for a new disaster relief charity to request with its application for a favorable determination that it can reasonably be expected to qualify as a public charity under Internal Revenue Code Section 170B1A6. There are a number of other options for public charity status, but the one that a disaster relief organization should usually request is the status under 170B1A6. Again, go back to episode 5 of EO Radio Show if that previous little bit doesn't make much sense, but it is a really important point. Before closing out this episode, a couple of other reminders and cautions. Be sure to get familiar with the requirements for the donor's contributions to qualify as deductible charitable contributions. The new disaster relief charity will need to be familiar with the charitable contribution substantiation requirements. These are special rules that require the charity to acknowledge contributions in excess of $250 by providing a timely receipt or letter, which of course can be electronic, which describes the cash or other assets contributed, the date received, and whether any goods or services were provided in exchange. So this can be an email receipt. It doesn't have to be sent by paper mail, but it does need to be something that the donor can print and retain in their records in the case of their own independent audit by the IRS. But I digress. Going back to the main topic at hand, the detailed requirements for substantiation of charitable contributions, it's important to remember that there are detailed requirements that apply to a donor who makes a gift of property, that's property other than cash. So be sure to be familiar with those rules as well. IRS Publication 1771 is the comprehensive guide for substantiation and disclosure requirements. Finally, if the charity will be soliciting contributions for disaster relief in foreign countries, there are a number of additional important rules. The issue here is whether the donor's contributions will be tax deductible for their U.S. income tax purposes. Contributions to qualified organizations incorporated in the United States and which provide assistance to individuals in foreign countries may qualify as tax-deductible contributions for U.S. taxpayers, but, and this is an important but, only if the charity that receives the contribution has full control and discretion over the use of the funds for the foreign disaster relief efforts. Putting it another way, the U.S. charity can't simply be a conduit for a foreign disaster relief organization. Usually, when planning for foreign disaster relief, organizers of a new charity should work with experienced professionals that are familiar with these rules. Listeners who would like to hear more on the topic of disaster relief for nonprofits can find links in the show notes to IRS materials and other resources to help guide their way. For those who are interested in more information about the distinction between public charities and private foundations, see Episode 5 of EO Radio Show. And for more information on disaster relief organizations, Episode 9 of EO Radio Show covers the important topic of what is an appropriate charitable class for disaster relief. So that's all for this episode. I'm Cynthia Rowland, and you've been listening to EO Radio Show, your nonprofit legal resource, brought to you by the Exempt Organizations Group at Farella, Braun & Martel. If you have suggestions for topics you would like for us to discuss, please email us at eoradioshow@fbm.com. That's eoradioshow@fbm.com. Thank you for joining us. Until next time, make a difference.